Good morning, all. Just thought I'd make a video on really yesterday's FOMC rate cut and do some market analysis, fundamentals and sentiment. So the news is that, and you're probably seeing it on a price chart, that the Federal Reserve are looking to cut rates, and what that is doing is lifting other currencies. Now, just because you see price going in a certain direction doesn't mean that those other currencies are strong against the dollar. It just means that the dollar is maybe, obviously maybe, but it is weaker due to the cut sentiment. So rate cut sentiment. So this is the Guardian blog. Interesting. And I was reading something here that was speaking about their cut probability. So 100% after FOMC statement. So they said, he said, this person, Jim Bianco, said, cannot find an example of 100% probability and the Fed failed to deliver. And there's another one, boom, the implied probability of July Federal Reserve rate cut is now 100%. So that means that it's now officially priced in. What you also have to remember that this is also data dependent, and also if there's a deal between the US and China. Also come up today, the two central banks will seize the limelight in the Fed. The European Central Bank releases its economic bulletin 2 days after. Also remember that everyone else is looking to cheapen their currency as well, apart from the UK at the moment and Canada. The UK being under a bit of Brexit pressure, and also yesterday there was inflation did kind of come back. Eases. So UK inflation drops back to 2%. So it was, I think, at 2.1, and then it eased back to 2%. Apart from that, everyone else is pretty much looking to cheapen their currency, right? So yes, there is negative sentiment about the dollar, but it's not necessarily you shouldn't look at it in isolation. You have to look at it in comparison on the fundamental analysis spreadsheet. What's going on? Yes, there's some negative sentiment. Yes, the US dollar might cut rates, but they're still the best positioned from a GDP perspective, year on year, quarter on quarter. And like I keep saying, is that an expensive dollar is problematic for every other currency, including the euro. So just because they're talking about rate cuts, it doesn't mean that everything else is or you shouldn't consider everything else, if you know what I mean. Right, so with that being said, there were some other opinions. Fed has opened the door for rate cuts, but it may not be as aggressive as the market expects, and I think I agree for now. It says, for now, we're sticking with our recently revised forecast for rate cuts in September and December, so they think two. But if the data deteriorates and President Trump and President Xi meeting next week goes badly, then they're moving to July and September. So again, it's data dependent. If things don't turn out as badly as is expected, or the market expects, then I don't think the impact should be as much. And obviously now July, if you look at the Fed Watch tool, chance of a no change is 0. Hike is definitely 0, and an ease is 100%. Now it just depends on the amount of easing that they're going to do. So is it going to be a quarter, or is it going to be a half position, if you know what I mean? So, or 0.5%, I should say, cut. So they definitely, 100% the market thinks they're going to cut in July. But, and again, these things can also change, again, depending on data. So as we know, and we've been watching this, what you'll see is that the percentages can go up and down, if you know what I mean. So don't. This is 41 days. Just keep an eye on this. Every other day or so, and just look at the probabilities, etc. If it starts to increase for some reason, then and you get no change starting to creep up, then maybe look for some positive sentiment on the dollar. What else is there? Oh, something that's quite interesting. Bloomberg, they say BlackRock, who are massive financially, is short in the Australian dollar. So BlackRock is short in the Australian dollar on a bet the central bank will cut rates to as low as 0.5 to revive the struggling economy. As we know, Australia is number 8 on the list, right? On our fundamental analysis list. The Aussie will extend for below 65 cents. All right, so I think we're at 69 cents, I think, at the moment when it comes to the Aussie dollar. Yeah, 69 cents. So they're thinking it's going to be literally way down here, 65 cents. So a good 400 pips potentially. But also something interesting. So that one, the Reserve Bank here will keep easing. And there's a quote: "I have no doubt the RBA wouldn't have an issue taking the cash rate below 1%." Okay, so the cash rate meaning the interest rate. Interest rates below 1%. Vardy said the central bank wants to see lower unemployment and higher inflation, of course. So does everybody, and is probably willing to push a little harder to get some traction. So basically, deeper cuts. Australian dollar tumbled this year. US trade frictions, sign of global growth is slowing. Way on commodity currencies, right? Last time there was something here that was quite interesting. The currency's been out of favour as the RBA turned dovish for the first time. Further easing is more likely than not, right? And that was from the central bank minutes. The Aussie, right? This is it. So the Aussie's decline won't necessarily be in a straight line. Nothing ever is. Right, it looks like it will be, but it isn't. So BlackRock sees the currency initially dipping to around 67 cents, where it's likely to find some support before falling around 65 cents, where when the RBA cuts to 0.5. So basically, just all he's saying is that even though they're short on the currency, even though they're short on this currency, does it mean that they're expected to move in a straight line? No, there will be pullbacks, and this is where they're going to be. On the pullbacks is where they're getting in. So you can see that financial institutions trade to the long term. They're not worried about day to day, intraday levels, if you know what I mean. They got their projections, and if prices come back, and pull back, then they just look to get in, to the short at levels of, or wherever their levels are, if you know what I mean, whether it's supply, resistance, etc. But they're overall, all they got to do now, all they're doing is literally just shorting, just going one way. And that's their projection. So this is just a pullback to where they can buy the US dollar over the Australian dollar for cheaper. They don't expect prices to go in a straight line. Nothing ever does. So it's a great example of having a long-term, bias, right? Definitely an interesting article, and definitely worth a reading. If I remember after the video to post it, I'll post this, and you can also listen to the article as well. Right, and by the way, BlackRock oversees $6.52 trillion, right? 6.52. So when someone like who oversees $6.52 trillion talks, then or a representative of theirs talks, then you may want to basically take some notes. Anyways, what else have we got? So dollar falls to 6 months lows versus the yen. So basically that's just. But there was an interesting. Interesting on this. They think they shouldn't be too low again against the yen. The further downside may be limited for now. but there's room for dollar selling elsewhere. And I think that's really because, again, as I've been saying, the yen, the Swiss franc, all right, are two currencies where you, they don't want a stronger yen. They don't want a stronger Swiss franc. So, Swiss National Bank have said that they are open to easing. Right, they are open to intervention. So, again, what you have again is like, for example, today you have Switzerland trade surplus smallest. So the trade surplus is the smallest in 4 months. So that's having an effect on their, their economy potentially. Right, exports fell while imports increased. That's never a good sign. They are in a surplus though, but they, there's a knock-on effect potentially regarding GDP. So, with that being said, overall the dollar, yes, has some short-term negative sentiment, but that just brings prices to where we want to be buyers. So let's get into the technicals, and Canada as well, by the way. Kind of slipped under the radar yesterday, but inflation for the Canadian dollar. And let me go back let's go to the economic calendar. Right, yesterday, Wednesday the 19th, you had Canada inflation came out way year on year, came out way above expectations. Right, so it was actually, the previous was 2, the consensus was a slight increase, and then 2.4 is fantastic. The core inflation as well. The consensus was meant to be year on year 1.2. It came out as 2.1. Inflation month on month, was supposed to be a bit lower, but it came out higher than expected. So the Canadian dollar and the Canadian Bank of Canada have really no reason to look to cut rates. I think they're the only ones that are probably not dovish on their currency at the moment. In fact, they may, because they're above that 2% target. If inflation starts to get out of hand and go even further above that 2% target, then you will start to see even potential talks of a rate hike, because they have to control inflation. But I think they're definitely on a wait and see cycle, and with everyone else trying to weaken their currency as well. And if the I guess the Canadian dollar gets stronger, then that should probably calm down a little bit, if you know what I mean. As this starts to get stronger naturally, the currency starts to get stronger, and then inflation starts to pull back. Inflation occurs when the currency starts to get weaker, right? So just as a natural function of everyone else getting weaker, this should probably calm down a little bit. But for now, the Canadian dollar looks like it's a buy, as long as the economy holds up and everything else holds up. And we just look to the fundamental analysis spreadsheet on that. So Aussie CAD, you're pretty much seeing that take place in the market. Canadian dollar looking to cut rates, as BlackRock was saying. And we've got our supply zones here, right? So what you'll be looking at is a pullback really to any kind of supply zone before getting short on this currency pair. Just haven't had any kind of opportunities to any real pullbacks, but this might be one if the Canada start to weaken a little bit. Say weaken, but there's pullbacks, profit taking, etc. You can go down on the intraday, look for 4 hour, 1 hour, etc., whatever your trading time frame is, and then look for some sell trades here, if not sell trades around here. Aussie Swiss, again, Aussie really setting off, suffering from risk off sentiment and global growth, but the Swiss franc is also under a lot of pressure. The lower this goes as well. So if risk continues to be off, then again, you're just looking at pretty much pullbacks. what we'd also be looking for right now is, trend line breaks. I think there was an opportunity really to get short here on the intraday. It did come up into that zone right there. Don't know if any of you would have got short around here, maybe probably a 1 hour or something like that, where you would there could have been a bit of an entry here. There was a level, say necessarily the best stop hunt setup. It was nice from above level, but the market was kind of ranging, trending, so it would have been difficult to see where you have a level 1, 2, 3, 4. Looks like it's selling off, comes up higher, looks like it's going to go higher there, and then you got your pressure candle right there and there to the downside. The only thing is that we didn't really get a ranging market beforehand, but what this also does is sets us up nicely for a potential move back up to here. So this would be where the CPR zone is. Traders who are trading breakouts, getting long wear above that level of obvious support. Also resistance, so resistance up into that supply zone. Fakes out on them. So if prices do come back to this area here, right, that's where we want to get short. If not, if that just basically fakes everyone else out around the 69 round number anyway, to the short side. That's if you were trading, risk off, risk on right now. I do like this level technically. It's a nice level technically for a buy trade, where you've got traders who definitely would have got short here and now looking to exit. So that's a CPR, to the long side, where you got a level and then nice big candle hourly, and then all of a sudden boom to the upside, hard in, hard out. And now traders who got short here and now exiting here. The only problem is obviously that you're buying the Australian dollar, which is probably the weakest, and it is the weakest out of the major currencies. Pound yen, same thing. So you'd be looking for, and I think what's happening is, if you do want to get long, you're waiting for a trend line break, 3 candles open, high, low, close, to prove that it's going to be, or put the probabilities in your favor that there may be a ranging market, and risk may be potentially coming back on. But if risk is off at the moment, again, all you're looking for is really, pullbacks to areas where you want to look for some short trades from here. That's it. It's a little bit of a better arrow. So yeah, that's really the play for now, until probably proven otherwise. Aussie, New Zealand. I think New Zealand is better placed than the Australian dollar. Both commodity currencies, again, probably going to see a potential, for a range. If we do get any pullbacks above this level here, then I'll be looking at getting short. As you can see, there's a bit of a level around here. Don't know if it's the most accurate for a stop hunt, but this actually looks decent for a potential fake out here. If you're looking at buying the Australian dollar against the New Zealand dollar, you've got a level. You've got breakout traders in right now. All right, and if this starts to do something like this, and you really want to be a buyer of the Australian dollar, by the way, then if you see something like this, and it's, retracement traders start to come in, and then it starts to put pressure on these guys, then that's a nice, buy trade. And then if you miss out on that one, if you don't want to take that, then you can always wait for that, as we know that there are breakout traders in this candlestick here. Most definitely, there are breakout traders getting in short, momentum's to the downside, and then all of a sudden they get caught out, you know. And it also depends on, you know, the pain and then the relief. So how far does pain, you know, if these guys are caught in their positions to the downside, we already know that these guys are, if they, you know, people do buy, you know, at the at lows and highs. So you need to see, I'll probably say that area, anywhere around there, or even pretty much around this whole area here, you know, the CPR, if that does play out. Right, Aussie, Australian dollar, US dollar, again, brilliant. The fact, I say brilliant, but look at this, look at this, look at this. You've got a level, not saying that you would have taken this, but you've got a level here where you've got a bit of a decent stop hunt. So I'm looking for this. So again, traders got a level that's been touched once, twice, a few times here. Looks like it's, you know, going higher and then it goes lower. Traders getting short. It's a bit of a deep stop hunt, and then prices start to come back into a level, right? They start to sell off, so they might look like a bit of a retracement. You can see where traders are putting their stop losses above here. Right there. And then as the day goes on, at some point it takes out all the stops for anyone looking to get short, and now it looks like prices are starting to go a lot higher. So if we were looking to, you know, buy the Australian dollar, you know, yesterday would have been at some point, you know, around here, not necessarily on this time frame, maybe an hourly or something like that. Yeah, so you'd have to really get involved. That would be the pressure candle right there. Right there. Stop either below the recent swing or below the market low, and then look for pretty much buy trades. But as we are looking to do, and as BlackRock are looking to do, is short, you know, short trades. So with that being said, there is a decent level here. First level to look for short trades, second level to look for short trades, third level to look for short trades, you know, anywhere around this area, this 0.7, 0.696 area, taking advantage of maybe some short-term dollar sentiment. So I like this. There is a nice CPR around this 0.7 and 0.72 level. I do like this area here on a lower time frame, where you can see traders would have got long here and then it collapses on them. So anything around here is all right. I like that. So if prices do come up to here, and look for those short trades. CAD Swiss franc. Go back to the daily. Nice supply zone, but you just had you know, some positive Canada news, and there is risk off. But I would say that if you were looking to buy this currency pair down here, if you're looking at daily demand, there is also a bit of an intraday level, right, where you had, I think it was on the 1 hour, you had a bit of a CPR zone. If you see here, don't know how many people would be pretty caught in their position now, but because it might have been relieved, but resistance, okay, it hasn't changed. So imagine you've got a level of there. So how many breakout traders do you think will be in there? A lot. You've got lower highs, lower lows going on. breakout traders looking at that obvious level, and all of a sudden, boom, they find themselves on the wrong side. That's a nice scary candle. So if anyone didn't get out here, and that's what I said, I think there's probably a lot of people who got relieved here, yeah, into this area here. As prices came down, they probably got scared out because of this massive big reversal type candle, and then off to the races to the upside. So not too sure like on a daily, on an intraday matter of fact, but it looked very nice anyway. There's definitely some hidden demand here, definitely some hidden demand, so I do like that. Demand zone. Right, so potentially back into this area here before looking at long trades, but the best area if we're looking at, you know, the overall range, or where the market is actually ranging from and to, it's going to be around here. So that'd be fair value, and then this would be the bargain area around here. Let me just delete this long term one, clear up the chart a little bit. Yeah, so yeah, you've got that going on. CAD yen prices came down to the area. All right, so you got support, prices broke, and then I was saying that this area here, this was a level CPR right here, right? In the analysis video, I think I did a couple days ago, I was saying that this would be, you know, because that looked like it was a short trade, and especially if you go down to, for example, a 4 hour, right? Resistance, so support, bit of support here, pull back probably to that 61.8 or so, maybe a bit above that, but it did hold. So you got Fibonacci retracement, yep. So price coming to that 61.8 and putting this large candle right there. Traders getting in short, but you got failures, and then all of a sudden comes back. So when prices come back around to this zone, what happens? You got a nice outside candle right here, 4 hour time frame, on the 18th of June. There you go. It looks like it's going, you know, to the upside. It's a nice level CPR zone right here. Let's delete that. What else have we got? Swiss yen. It looks like the Swiss franc is strengthening slightly. I guess risk off sentiment is dissipating. For now, it's not necessarily in focus for now, but if it does start to come back on, I think this higher level here is a decent level short. But again, you'd be trading purely from a risk off perspective, because these ones are pretty much the worst of the worst. There is a bit of a breakout CPR, but not necessarily the best, if you know what I mean. I think I'd want a nice bullish candle, and then it kind of collapsed, but decent. Nevertheless, I'd probably say up into this 109 area, but wait for probably a manipulation before looking at short trades. Dollar is just selling off, all right, which is decent. What you want to see before buying any of the dollar pairs is looking for really dollar strength, or some sort of maybe some bullish setup, you know, at a certain level before looking to get long. Doesn't necessarily have to be at a level, but preferably, you know, at a level. Whether it starts turning up from here is anyone's guess, but you've got, you know, other levels within this area here as well to look for the any kind of bullish price action. Again, it looks scary to the downside, but this is what, you know, Donald Trump wants. If they can get a weaker dollar, and then it, you know, basically a cheaper dollar produces inflation, if they can start to meet inflation targets, then pretty much bets are off on a rate cut. And also what a cheap currency does is it boosts exports, which helps with GDP. So always keep that in mind. It's not a bad thing that the dollar is selling off. Even though you're, sorry, one sec. Even though you'll see it in the news. It's not necessarily the worst thing in the world, and plus, markets don't go down forever. There will be, profit taking, etc., and there will be some positive sentiment within that overall down move. So, Euro Aussie. Euro Aussie. This looks. I do like this as a technical setup, but just on an intraday. But just this pair is just quite awkward because you're really buying the weakest currency against another really kind of weak currency. The euro of the two is actually, I think, is best placed. So on the intraday, you're waiting for, if you're looking to trade this on the 30 minute or 15 minute, you're looking for price to really kind of come into this area here before looking at any kind of short trades. Nice CPR zone to the upside. I'd probably say around here, maybe anywhere up into this 64 round number, to be fair. So I think that's decent from an intraday, but from a daily perspective, again, what you want to see is prices at the moment break this trend line here, free open, high, low, close, take out maybe some demand before looking at coming back up into this area, and then looking for a short trade from here. That would be really the move. Oh, if you are looking to get long on this currency pair, then really it's down here for looking at a long trade. Euro CAD. You can see the effect that the euros, or the Canadian dollars had, on the euro. There is some supply here, supply zone. So if prices do come back into this area, looking at it from a lower time frame, looks decent. I like that. We got that big push up there, and then you got the collapse. So I think anywhere around here is decent, all right? But then you might look for manipulation, and then that would definitely be a nice trade. If not, then it's pretty much just shorts all the way for now on this currency pair, I think. So yeah, that would be my bias anyway. If you are looking to buy the euro, all right, what have we got? You really got this whole area here, demand. There is like a demand zone there, but in the interest of just clarity, what you can do is draw it from the low and then maybe to where there is a candlestick where it starts to break higher, so probably around there we can get rid of this one. Now I'd probably say this one starts to make some higher highs from here, comes back in, etc. So this whole area, you've got a bit of support and resistance here, and then you've got a level around here. Supply, support, resistance, yeah, so to the lows. So if you are looking to buy the euro, I'd probably say this area would be the better area, but it's really not clear. It's not a great currency pair, but the level has been touched once, twice, 3 times. So even if it comes down here, you could see a manipulation to the downside, and then it kind of come back up. But for now, pullbacks into supply. I think Euro Swiss. If anyone did get in on this area here, it should be a decent trade to the downside. I think that was definitely an entry on the 4 hour. I think it was 2 candle swing. Yeah. It's a nice risk off trade right there. Nice risk off trade. Stop maybe above the high. So you should definitely be in some profit. And also, if you are looking to take profit, targets, yeah, you would have hit that 80% level right there. So a nice nice trade on that one. Euro Swiss trade. Now we're in an area where you're looking for you are looking for potential buy trades on the euro, meaning that you prefer the euro to get stronger and the Swiss franc to get weaker. We are into a low, and overall we do have, I think this is a nice technical level. You got a bit of support, prices break down and then they come up. So what does that indicate? Breakout traders are definitely in this area here, anywhere around here. Because you would have had move down, then move up, and now these traders looking to potentially get out. The fresher area would obviously be, if you're looking at the 4 hour, probably from down below, if they didn't get out here. But even here, and even this candle here looked like it was going lower. If you look at this, like you had resistance, then that nice bearish outside candle looked like it was going to the lows and then fails to follow through. And then you even have another one here and another one here when it comes to, you know, some bearish price action, and then prices basically don't follow through. When prices come back to these levels around here, you can see where traders are attempting to get out, and now we've got these lower traders looking to get out, which adds to the supply and demand equation at this zone. The main thing though is that you must think that the euro potentially is going to get, you know, stronger, potentially some risk off sentiment coming into the market. Swiss franc looking at, you know, adding some sort of stimulus, prices potentially entering into a range as well, which isn't, again, a bad idea. You've got lower highs, lower lows, 1, 2, 3 candles open, high, low, close. Prices should enter into a range between this low and this high. It just depends on where you want to get in at the moment, which I think is actually a decent trade. You've got weakness versus weakness. What's the Switzerland 5 versus 7? So Swiss franc is actually slightly stronger. What was that? Switzerland is 34, 35, only really a point in it, even though it's 2 places, but it's only a point, so they're pretty much even. So a potential for a buy here, nice potential for a buy. If you are buying, just, you know, trade at maybe, you know, quarter position or something like that, or maybe put 1 position in. If you are looking to trade euro pound, again, if you're looking to buy the pound and short the euro, you want to see 3 open, high, low closes, as well as supply start to take out these demand zones, or at least this demand zone here, before even attempting at getting long. I do like this for a CPR zone. Right, nice. You got to move up, pull back, and then these guys are definitely going to be caught in there. Everyone here is caught, so if prices do come up, or they come down, add a bit more pain, and then that's it. That's what you're looking at intraday. Nice, decent trade. Euro yen, exited this trade at around this area here, so got in up here. Just thought I'd exit at the 80% level from the high to the low, which was around here. So if you did get in at this level around here, That was really where the exit was. Again, right now we're looking at potential buying opportunities. But just be careful that the euro is weak. The yen benefits from risk off. It's number 5 at the moment. Again, only 1 point between them. But you could see a bit of a respite or a bit of a ranging market. The question you have to ask yourself is, do you want to get involved in this right now? Now, if you go down to a lower time frame, let's say the 30 minute, what this is looking, shaping up to be, but it looks better on the 15 minute, is potentially stop hunt level. So if you wanted to be a buyer on this, you can see where the market is ranging. And even if you want to be a seller now, it's decent intraday level. So you've got a ranging market, and what you probably want to see is prices now start to break to the upside, probably closing like a strong close. Yeah, start to pull back there and then there. If you're looking at buying the euro against the yen, you would want to see prices come down to here. Again, prices kind of put in that manipulation and then to the upside. So right now, a decent trade. And this is not taking into account obviously daily supply and demand zone. This is just like an intraday trade. If you trade, 15 minute charts, I want a quick in and out. So that's a decent level right there. What else can we say about this? Let's maybe draw this a bit to the low side, because what we do have is some supply here. Supply. Right, so this is a level of supply. So we are coming up into a supply zone. So that intraday level actually looks better. There is a bit of a level here up top as well, I like. Because again, from a manipulation perspective, you got a little bit of a sideways market. Prices break higher, look like they're going higher, fail, and then so these guys here on a lower time frame, all these guys here, it's not necessarily the hard in, hard out, the perfect one, but I think it's decent level for a short. There's definitely some supply in that area, and also a bit of a CPR as well. I like that. So 2 opportunities to potentially get short within this zone here. Euro, New Zealand. Prices are kind of holding here at this demand zone. Again, to the long side, you'll be looking at any kind of intraday setups. Nothing quite yet, I think, but I think my bias is going to be to the short side. As you guys know, there's a nice little level there, and what we're looking for, again, especially if it looks better on a 1 hour or a 30 minute, is where you're looking for prices to kind of come back up into this area here before looking at getting short. So that's actually a level of support resistance. Nice level here to get short if prices can get back up there. Euro dollar coming back up to a zone. So prices did work out here. And so what I'll be looking at is either sell trades around here, anywhere around here, that zone there. CPR, right, the higher end is more of a CPR. It's not necessarily the textbook, to be fair. It's not Nah, actually, you know what? I'm gonna keep that off. No. All right. If it kind of came down, then went up, then kind of collapsed, then fine. But there is supply here. It's not CPR there, but there is definitely supply here. If not, then what you're looking for is levels around this higher zone here. There being one of them, I think. Yeah, around this 1.14 level, this 1.14 zone, as an area to try and look for potential short trades. There is this whole supply zone really is nice. I like it, and I'll be probably drilling down if prices come up to here and then start to look, analyze it a little bit more. What time is it? Okay. Right, British pound, Australian dollar. Australian dollar being weak. I guess they're both being weak to be fair, but you come back up into this supply zone. If you do want to be a seller, then pretty much now is the time. I always said I don't really like this pair. You've got two really kind of, the pound isn't weak, but it's just not strong due to Brexit, and then the Australian dollar is very weak. So we did get a bit of a sell-off at a supply zone, but again, because of a weak Australian dollar, it's less likely to continue to really the downside. Let's have a look. Pound CAD, again, short trades here. Shorts all the way for me. So you're looking at level, but just remember where you are as well in the overall. You haven't had really any kind of pullback, so just be definitely aware of that. You're buying really at the highs for the Canadian dollar. You're buying it in an expensive area, so you may want to wait, or if you are trading, this supply zone, maybe zoom down into, a lower time frame, like maybe the 1 hour or the 30-minute. If you do trade those, if you don't, just make sure you've got enough to the downside in order to look for shorts. So if for example, you see a candlestick pattern happen here, but you've only got, maybe 1.5 or 1.5, but maybe 0.5, it's negative risk reward before you get to the lows, then that's not necessarily something that you should be looking to take. You'd have to just wait for price to come up to a higher level and then look for more downside. So at least if you're looking for targets and you're aiming for the actual lows, you've got a decent amount to kind of aim for. Pound Swiss probably be the same with this. There is, from a daily perspective, there is still a bit of demand there, but you've also got supply right here. As you've made a new low, prices are pulling back, so you'd want to probably see price come up into this area here, lower time frame, like 30-minute or so. You're looking for prices to come back up into here. That's a nice CPR there. All right, into this area. This was, I think I called this trade, matter of fact. Yeah, I did call this trade. Nice stop hunt move, and then prices end up going to the downside. So there you are. Anyone who went long in this area here, retracement traders, definitely caught. So if you get a move back up into this area here, I think anywhere really around here is a sell trade. Again, risk being off, and you want to buy the Swiss franc. Technically, this is nice, very nice, if prices can get up to, again, this zone here, and then look for short trades. British pound, Japanese yen, again, we have moments where they pull back. If you're looking to get involved in that trade, this is going to be the area here. And again, risk off. is where it is. It's at, if you get again 3 candles open, high, low, close. This candle hasn't gone open, high, low, close yet. Within the area, so you want 1, 2, 3 into that area there. Then potentially look for some short trades. There is a potential trend line around here as well. So you got one there, you got one there. I think those are probably 2 of the most obvious ones. So 138 and potentially 139. Look for shorts. Again, Brexit uncertainty. Boris Johnson, looking like he's gonna win the or take the seat for the Prime Minister, and it depends on how the market reacts to him. Is he a Remainer? Is he a Leaver? Is he gonna, basically do what he says he's gonna do and take the UK out of the European Union? If he does, then or he looks like he does, then I think the pound is definitely gonna go further to fall. If he looks like he's stalling and wants a deal and trying to implement Theresa May's deal or treaty, then I can see the pound probably rallying from there. Pound New Zealand, pretty much again I would say shorts. So you're looking at anything I think up into this zone here. And why is there a zone? I think on a lower time frame. Yeah, I'm saying that this hard in, hard out price movement, you got a little bit of relief around here if anyone did get in around here, but this 1.9440 or thereabouts is a decent short from a overall perspective. I think any of these areas, especially up into this 1.96 area, is a definite say definite, but it's a looks like a nice sell trade. If you are looking to buy the pound, then you're looking at that area right there. There is some demand right here and looks decent. You've got 1, 2, 3 open, high, low closes. It has taken out a level of supply, which was here as well. That level was a level of supply zone. So prices have taken that out, created higher highs. So if prices do come back down here, we could see a potential ranging market. But again, it depends on whether you want to be a buyer of the British pound or a seller of the New Zealand dollar. Pound dollar. It had to come back at some point, and if the pound rallies, I think we've got in 30 minutes trading economics data. Right, so we've got that was yesterday. Thursday, I think it's Super Thursday or whatever they call it. So you've got 12 o'clock. So monetary policy minutes, Bank of England quantitative easing figures. The main thing is going to be whether the vote is going to change for rate hikes or rate cuts. Yeah. So if this changes, if they start to look for, I don't know why they would, but for rate hikes, right? If that tries to, then that could surprise the market. Yeah. And a vote for a rate hike isn't necessarily going to be the best thing for the Bank of England to do because of the economy isn't doing so great, if you know what I mean. So I doubt they'll ever, hike rates. Cutting rates, don't think they will either, simply because they're at the 2% inflation target. So they don't necessarily need to cut rates. So I think they're on a holding cycle. So I don't think there'll be any surprises there anyway. There could be, you never know, but the likelihood of any kind of surprise, I guess we'd have to just have a read up on that before it comes up. So we've got, so I like this area up here. It's 128, 127.50 above that level for a short. This being CPR zone, you know, to the upside. There is, let me go down to the lower time frame, 4 hour. Yeah, so you've got nice spike up and then hard in, hard out. That's picture perfect, that is. So if we do get any, you know, prices do come up into this area, and you can start to see where you get the moves, when moves start going really, you know, kind of parabolic into a level, that kind of big move there into a level. I like that. I do like that, because markets aren't, you know, don't go into a level all the time, as far as they're not parabolic like that for forever and a day, if you know what I mean. Especially when you're looking at the British pound weakness. Yes, there is some dollar weakness, but it's I think this level here is a decent level. Again, we have to wait for price action to come in, etc., and see what happens. But I like this area, this whole zone underneath there, around here, and here even still much better. So that's where I'll be looking for short trades. New Zealand CAD, two competing currencies. Nice setup here. It's just that I think the Canadian dollar did have some really positive news, and I think that the New Zealand dollar, you know, had some positive news as well. They did come out, and they did meet expectations on their GDP. So it just depends on whether the market thinks that the Canadian dollar is a bargain here, more of a bargain, and they prefer the Canadian dollar over the New Zealand dollar. So a decent trade, you know, looks like a bit of a stop hunt, yeah. Looks like it. So we got 1, 2, and it looks like it's just gone down, come up, failing to go down. So it looks like, where are the stops? Where are all the stops? Where are all the stops? Right, the stops are going to be there. So if you start to see a candle that starts to kind of push higher, yeah, I think that's going to be the entry, right, for a stop hunt entry, because you've got taken out all the stops below, come up, come down. Looks like it's you know, retracing to the downside, selling off, and then if that starts to fail again, then that's a nice entry. That'll be on like a 1 hour time frame. It doesn't look so clear on a 4 hour, to be fair, but you'd have to wait for, maybe if you want to get involved in this, maybe some sort of 2 candle swing around here. You'd have to wait for, but the hourly looks a lot better if that does if that does occur. Let's have a look. Oh, to the downside. If you're looking at this to the downside, there is supply here. Supply's made lower highs and lower lows, so there is a bit of supply around these areas, but you've got 2 competing currencies, so we could see a bit of a respite for the Canadian dollar and a bit of an increase in the New Zealand dollar. But that, as far as the I would prefer it to obviously be strength versus weakness, but technical setup, I like this. I do like that. New Zealand Swiss, again, prices have come down into a demand zone, but because risk is off, you may want to obviously look for trendline breaks before looking at entering. So you want to see prices, free open, high, low, close candles clear of this level before looking at you know, long trades. Short trades, there was one here yesterday. Prices came down, came up into that supply zone, risk off. Again, you'd have to probably go down to the 1 hour or lower time frames for this to ever look like it's worth it, because if you were there in a 4 hour 2 candle swing, you got it, but you didn't have enough to the downside really to look for any kind of to really kind of enter this trade. just remember as well, you're buying, if you're buying the Swiss franc, you're buying at the lows. This looks like a nice cheap area for the New Zealand dollar. There is an outside candle here which is still valid, it hasn't broken the low, so you could be buying if you wanted to buy here. This is a nice, actually quite a nice buying opportunity. Yes, you got a nice buy. If you didn't buy here, then you've got a bit of a pullback, and this could be a better price, so you could be looking at something like this, long position, stop below the low. Decent trade, 2 candle swing. I'll consider that. New Zealand yen, same thing really, but I think if we got any other confluences within that area, got an outside candle, looks like it's potentially looking like a bit of a fake out, so you would have had breakout traders getting in here, underside looks like it's selling off, and then underside again looks like it's selling off, and then we've got a bit of pressure coming on to these guys. All right, let's go down to like a 4 hour. Yeah, not clear, to be fair. It's not necessarily the clearest setup. You definitely know that there's some stop hunts above there, but the only thing is that the setup isn't necessarily great. I'd probably want to see more. Let me see. Actually, there is a level. There is a bit of a level here. Support there, turn it into resistance. Traders, yeah, as it goes, that might be a decent one, and then look for any other confluences as to why there would be traders getting short there. Fibonacci retracement, that's 38.2, yeah. So hasn't quite touched it, to be fair. If it touched it, that would have been a nice one, but this may come up, touch it, and then that's where 38.2% traders will be getting, and then it kind of rolls over. So be careful if you are looking to buy the New Zealand dollar, Japanese yen. I do think the more I look at it, it's a decent trade, I think, but there were just some little things that maybe I might not necessarily be happy with. Round numbers there. Alright, here's what I say. If you are going to enter this, and you're looking at the lower time frame, and this is to the upside, you'd have to now, if in doubt, just don't take it, even if prices do go up to the upside. It looks decent. It does look decent. It's around this level here, but I'm not necessarily convinced. And if you are, just put a very small position, like I said, maybe 0.1, 0.2%, and let's just see if it goes. Like I said, it's a decent trade if this starts to put in nice pressure, and if it closes above that convincingly. Yeah, but what could happen is, the reason why I kind of pause is because you could, on a lower time frame, be the one that's being drawn in. So we've got a level here. Yeah, a bit of a level here. And what could happen to you is that it could, if you enter long on the New Zealand dollar on obviously a higher time frame, what you could see is prices come up and do something like that. But again, I guess it could happen in any direction. You'd have to just, like I said, take a very small position, see if it works out, stop below the low, tight stop, and then if it works out, it works out. This, on the other hand, is looking decent for a CPR at the lows on a lower time frame. Again, breakout traders would have been in there if they didn't get relieved. And then you've also got another kind of retracement CPR zone around there as well. So this whole area is actually looking decent as well. Tracement, lots of demand here. So if prices do come back down into this area here, that would be the long trade intraday. But I do think for potential long, this is looking fairly decent. 12 hour, yeah, you've got pin bar, and then if you get a close above that area, convincing close, maybe on a 12 hour, decent. New Zealand dollar, what time is it? Alright, so again, up into here before looking at short trades. Nice CPR zone on the lower time frame here. That kind of hard in, hard out, breakout traders, clear level. So here's where the CPR would be. Right here. Within that area there, so that's what you'd be looking for. And if not, then looking at getting short. Again, you can get short within these supply zones anyway, but these are like the would be the best areas, if you know what I mean, to look for short trades. Dollar CAD, this was look at this trade. I posted this on I think just the day before, what was it, Tuesday. A very, very, very nice stop hunt there, and if you were brave enough for very nice to hold that would have been very nice trade. Look at that, 8-to-1 trade, very, very nice. But I think we're taking that out. Now you'll be looking for prices to kind of come down into this demand zone. You've got another demand zone just below that. I think that's probably the better one. There. So yeah, it'll be really prices coming down to these zones here before looking at long trades around here. Delete that for now, and I think that's pretty much all to really say about that. New Zealand Swiss, I like this. If prices start to come down here, potentially we could see a nice little manipulation setup. Right, prices are coming screaming into this level here. You could also look for just some outside candles and 2 candle swings within this area, but just be aware that potentially you could be being stop hunted, and if you do, then it's just re-entering again if you see the stop hunt, if you know what I mean. So small positions, especially because obviously there's negative sentiment with the dollar, but I like this. I do like this, and again with the backdrop of the Swiss franc, not liking a strong Swiss franc, then that area there, this area here, and especially this lower area right here, right, that area there, that's nice. Ooh, this one looks now looking like a stop hunt. It's looking like a stop hunt, you've got a level 1, 2, 3, spike down and then spike up. Now I guess we could draw this. I'm going to draw it from here simply because I don't want to really make it kind of messy, and we know this whole area is a bit of demand. It's fake demand because this was done by algorithms, but I'm going to draw it from here, right, from here to here. But what we do see is on the lower time frame potential. You can probably see it better on the hourly. The potential for a stop hunt. So you've had 1, 2, 3 levels touched the top of that level, and then it's broken down overnight. If anyone had stops below here, they're all been taken out. But what that also does as well is it draws in breakout traders. Yeah, so it draws in the breakout traders. You know, retracement traders looking at getting in there as well. Draws in more breakout traders, and now their stops are being put under pressure here to the underside. So I don't think it's necessarily a trade just yet, you know, because anyone who's trading to the downside, and let's go down maybe into a 15-minute, in fact, might be from a 15-minute perspective. That's where traders are placing their stop losses, right? Around here, definitely around here, and now you've got that kind of pressure candle right there. So this could be a decent trade to the upside on a 15-minute. By the time you see this, you may miss it. But if you get, let's say for example, you get something like this, if you get maybe a bit of a pullback and it draws more traders in, then starts to put in another pressure candle, because this is definitely a pressure candle right here, definitely, then that would be a good entry. Unfortunately, I don't think I'll be able to get this out, you know, in time. So this trade probably is a missed trade or missed opportunity. US, Singapore, that's about it, and then back to the beginning. So I'll get this out to you ASAP, guys. I probably won't be around today. I've got a lot of running around to do, so I will, you know, try and catch up with you guys at some point, you know, during the day. I'll probably pop in and out, maybe this afternoon, and I guess I'll speak to you all later on. If not, yeah, probably maybe late this evening, if you've got any questions, and if not, definitely tomorrow. All right, take care.